Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here, I'm John Sneisen, and we've been talking a lot about stock buybacks lately because it's just gotten to this extreme level that we haven't seen since, let's see, 2007, 2008, I wonder why. There's a reason for that, folks, and we'll get to that that soon. But first, looking at this Wall Street Journal article, and yeah, I know, Wall Street Journal, we're going to elaborate. But anyway, this Wall Street Journal article says, stock buybacks are booming, but share prices aren't budging. Some analysts worry companies are buying their shares at excessive valuations, while others say cash could have gone toward capital improvements. U.S. companies are buying back record amounts of stocks this year, but their shares aren't getting the boost they bargained for. S&P 500 companies are on track to repurchase as much as $800 billion in stocks this year, a record that would eclipse 2007's buyback bonanza. Among the biggest buyers are companies like Oracle Corp, Bank of America Corp, and JP Morgan and Chase. But 57% of the more than 350 companies in the S&P 500 that bought back shares so far this year are trailing the index's 3.2% increase. That is the highest percentage of companies to fall short of the benchmark's gain since the onset of the financial crisis in 2008, according to Wall Street Journal analysis of share buyback and performance data from FactSet. And you could see the chart right here. This is alarming to say the least, and at the same time we see U.S. senators challenging the SEC on share buybacks, and it's weird to see the puppets tell the puppet masters what to do. But as this article kind of goes into here from Forbes, the decades-long diversion of business income to shareholders has resulted in a soaring stock market. Okay, a lot of euphoria there, but also stagnating incomes for most of the population. If this gargantuan transfer of assets to the existing owners of shares is allowed to continue, nothing less than a global political or financial cataclysm, or both, is the offing. The good news is that remedial action may be on the way. So basically it goes into the fact that the principal mechanism enabling this massive shift of resources, an estimated $1 trillion in 2018 alone, is a practice known as share buybacks. And John, I'm going to just disobey that article a bit. I don't think government is going to change anything here. I think that we need to see this stop getting propped up, stop centralized, stop being manipulated, and let it crash and fall and burn, because the market sentiment isn't there. There's no fundamentals there. There's just a lot of investor confidence based on glassy-eyed euphoria. But anyway, John, I wanted to go into, first, can you explain to the audience what exactly a share buyback is and where this crazy idea came from?
But we need to regulate the markets, Josh, or else, it's gonna completely go haywire. No, seriously. So share buybacks is simply when a corporation buybacks, they take back their own shares and buy back in order to keep less and less shares in circulation, pushing up their share price. So that's mainly what it does. But what is happening also on top of that is that a lot of these corporations are using pure straight debt, a loan that they take, and buying back shares with the loan. And then they the banks take those loans and then push them into special purpose entities, just like they did with the housing mortgages in 2007. And then they shove them into collateralized loan obligation derivatives, which are selling all around the world. And of course, you can just take out a credit default swap on that. And then you got the full scale, like just exactly what you did last time. Now the problem is all this debt that you are accumulating here that are underlying is so much bigger than the $13 billion of debt of housing that blew up the whole world's financial markets.
Well, yeah, it's basically just vast manipulation of the markets. It's market manipulation, plain and simple. And it's very fraudulent, to say the least. Of course, we wouldn't be seeing this without the fact that they want to prop up a dead horse that I've equated to basically getting so fat that eventually it's going to be propped up too long, too fat, too heavy. It's going to fall and crush us underneath. And that's I'll get later on to the point where we should be self-sustainable and all that kind of stuff. But first of all, John, I want to talk about how this is going to affect markets going forward, because obviously like I mentioned, there's lots of market euphoria. Everyone's always super excited. I think it was today or yesterday went up 200 points on the Dow. Everyone's super excited. They think everything is going to keep going up, even though we're seeing a lot of resistance finally, because people are kind of scratching their heads and going, how valuable is this market really? And is it really as valuable as like this vast amount of money? It kind of reminds me, just to cut away for a second, of all the people investing. There's billions of dollars into Dentacoin, the cryptocurrency, and Dentacoin was based on dental hygiene. And it's like, why is this doing so well? And this is just the example of every bubble historically, is that it doesn't have the value there. Unlike Bitcoin and other things, Dentacoin obviously doesn't have the value going forward, and doesn't really innovate the market all that much, right? And the same goes for any of these. We saw Pets.com versus Amazon. So Amazon had some value, but Pets.com was mixed into that bunch. It's not to say all these stocks are going to go down forever, but we saw Pets.com fall because there wasn't really the market that was speculated on with Pets.com, whereas we see Amazon.com skyrocketing over 10 years after the dot-com bubble and being one of the biggest companies that we've ever seen. The tech bubble is another issue completely going forward. But John, as this continues to get propped up and centralized and manipulated and inflated like a gigantic balloon about to pop, I mean, what can we expect from this going forward? What's the next big indicator?
I think Lambos are next, to be honest. Everybody should just buy Lambos, like what happened in the Bitcoin bubble, but it wasn't a bubble that completely burst. It's a bubble that will reflate at one point because it has fundamental value, Bitcoin.
Just in its infancy, like a lot of those cryptocurrencies haven't even seen the daylight yet, and then there's really bad ones, majority really bad ones, that brought the market into just a speculation mode.
Oh yeah, and I just want to go back to the Mississippi bubble, the first ever recorded stock mania, like share mania in a company, and it was of course the fraudulent John Law that went over to Orleans, where it was a freaking swamp, and he promised people that there were gold everywhere, there were diamonds laying on the ground. It was just a wonderful time. And then meanwhile, people went there, and filled with people, settlers that went there just died. And it was at one point at the peak of the bubble where there was almost no replenishment of food or supplies at all. They were just financially speculating on this, and it was so insane. And they were talking about how everybody had their own chariots and everything, like it looked like everybody was so rich. And of course a lot of people went into debt. Oh, surprise, they went into debt, margin debt in today's markets it's called, and then bought a whole bunch of these shares. And at one point suddenly it's like, well, maybe we should question and look at the fundamental value of the Mississippi company. And then it's like, oh, there's nothing there. There's literally zero money available, and they lost massive amounts of money. And then the share price, of course, collapsed within a couple of months.
Wait a second. This is sounding eerily similar to major banks around the world. I mean, i.e., all of them with their cash to deposit ratio. Are you saying that this Mississippi company could be a little bit like, I don't know, J.P. Morgan and other big banks around the world?
Well, any big banks today, it's golden green, forest that they're promised to everyone. It's such a fraud. Like if you look at the S&P 500, what they were talking about here, of course, is when you look at 2018, like how there was a massive peak in share buybacks, but like if you look at the max here, like I'm just gonna pull it out so you can actually see the whole max of since 2000 and 1997, so you can see all the bubbles here. But what is most important is you can see the peaks and valleys, and you can kind of see like a massive peak that formed now in 2018. But now you're seeing like at the big max trend, you see that it's starting to slow down. Like it went down a bit, and then if you pull it over to a year, you see like there's something going on here. It's just going up and down. It's not even pushing and trying to push forward and over the top of 2008. Now a lot of people believe that they're gonna go way higher. They believe that it's gonna go to 5,000. Well, it could go to 50,000 or 100,000, the S&P 500. Well, at that time, you're looking at the Venezuelan bolivar. Look at the stock market there. They're up 58,000%. Well, it's all their currency is garbage, so it's not really anything. It actually has gone down in value, but its currency went so severely devalued that the market actually looked pretty good.
Yeah, it reminds me of comparing one bad currency to another. It's kind of like relative motion. Both are going down at the same time, but one maybe just a little bit faster than the other. And everyone's like, oh, it's only gone down like 2%. Yeah, but compared to what, the US dollar, which has also gone down, this amount, 99% since its inception. I mean, it's just, it's totally crazy. And just keep in mind, so this is wrapping it up, I guess, here. So there's a whole bunch of share buybacks. It's meant to kind of prop up the system, but it's not propping up the system because market sentiment just isn't there to the extent where they'd want it to be after all this massive spending. And look what we have here. It's not working, and it's looking like it's starting to get crippled and ready to fall down. And this is just the inevitable end to this kind of system. So folks, I mean, it all comes down to financial responsibility and not being stupid. Don't be stupid. That is like the main point of, I think, all of our videos really is you as an individual, you should stay safe, be educated, don't be stupid. When it comes down to it.
Educated is the key word there, Josh.
Yeah, exactly. You, as an individual, it's up to you to make sure that you protect yourself, your wealth, and your family. And when it comes down to it, you guys have to get outside of this vastly centralized system, this debt-based system, because they thrive off of debt. They want to see you in debt servitude, and they want this market sentiment to keep going upward and upward and upward, even through the bubble, through the roof, through the moon, out into planet Nibiru or whatever the theorists say. And basically, and you'll never get there but anyway, we're not going to go there. But it's just it just keeps. They wanted to keep getting propped up more and more. And the fact is, they know that once it stops, it'll all come crashing down. So they want to manipulate it further and all the way up as far as they can to the stars. And it'll never ever continuously go up forever. No market does forever. There's other markets that come in and replace the old ones with better ideas. And on a free market, we wouldn't see this level of stupidity. We would see actual competition in the markets and a lot of diversity in production and innovation and competition. So we wouldn't see this level of insanity, though there's always going to be stupid people and always going to be people that are really greedy and really set on their ways of just making more and more money all the time. Lambo, Ferrari. But in the end, it comes down to you folks, and that's the main point. Food, water, shelter, self-defense. You're not gathering things with the toughest guy on the block. Gold, silver as wealth insurance, not an investment, but as wealth insurance, in my opinion, his opinion. The idea is that you guys can actually preserve your purchasing power and then look at cryptocurrencies like Bitcoin and, EOS and Dash and these other ones that have fundamental value there and have a potential on the markets to innovate. Of course, all fiat currency eventually reverts to its true value of zero, always has, always will. Going back to 1024 AD in China, these stock markets have climbed and fallen a million times, and they always end in war or some kind of foreign conflict, as we've seen historically. And then we see the fact that these fundamentals aren't there. So when you look at the stock market or the monetary system, the fundamentals aren't on the table. There's way too much manipulation, way too much centralization for the fundamentals to truly be there. So therefore, you cannot put a date on the crash. You just know it will happen. So don't come to us and say in like 5 months, wait, it didn't crash yet. What happened? Well, we never said it would crash in that time. We just know it's coming. We know it has to come because it's inevitable. It's just mathematically impossible for this to go on for too much longer because it is more inflated than I think we've ever seen any bubble in the entire history of the world. And yeah, that doesn't sound too sustainable to me. Eventually the air gets let out of the balloon and with it you go flying around. You know that sound it makes all over the place. Yeah, exactly. So with that said, John, what is your bottom line on this report?
Well, my bottom line is if you actually buy into an investment and then you lose money on that investment and you are mad because you lost money on it and you didn't educate yourself on it, then that's your own fault. Listen, it's your own fault. It's not the financial advisor that convinced you. It's only your sole responsibility, and people need to get up to that and actually take responsibility over their own money and investment, because or else they're going to be run by the lives of these guys that sit. During 2008 there was financial advisors here in Canada during the massive crash of 40 to 50%. They were having a huge party up in Banff because they still were making the exact same amount of money almost. These guys are such frauds, and then you want to give all your life savings to these guys to just leech off of you and suck you dry like a vampire squid. And of course, you know, when you look at all these fiat currencies, I recently just going to tell you about an article that that is called the Fiat Currency Avalanche to Destroy the Fed. And I just show like all these currencies that Josh told you should look into it. Like there's a ton of different currencies. They're all loose into the US dollar, but then you go and look at the US dollar versus gold and it's lost tremendously. So it's, again, you know, you have that one currency that fails and everybody's like, oh no, the Canadian dollar is strong or like whatever. No, they're all weak, garbage, fiat paper currency that will engulf the central banks at the bottom of the peak.
Yeah, absolutely. Don't be dependent on those that are dependent on your dependents. And of course, don't walk below big banks, skyscrapers during the crash because you might get hit by fallen bankers. Seriously though, they party until it's over for them and they get exposed and then they go pretending to be a bird off the, you know how it goes. Anyway, we've seen this a few too many times in history, and I think it's about time that we learn from our past mistakes and be self-sustainable as an individual and don't blindly follow like zombies everything that we're told by financial planners and bankers and governments and central banks. Yeah, exactly. So, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.